Good morning everybody and welcome to this Smart Charts European session. Hope you are all well. So what a fantastic trading week it has been. We've had some wins, we've had some losses, we've had some low risk trade, high reward risk trades, we've had some good reward risk trades as well. The key thing is though making sure that you're following a process, following a plan, that you had the belief and confidence in, and then just it's about patience, consistency, and turning up and listening to what the market is actually telling you to do. Let's get an update on what's going on in the market and the key themes that are affecting the flows of the financial markets right now. Okay, so first of all, we've had really risk on prevail across the majority of asset classes, but not all asset classes. So US stock market indices, in fact, European stock market indices is where the action has been. So we've had US stock market indices continue to rally higher and record new all-time highs in the S&P 500 index and the Dow Jones 30 index. The Nasdaq 100 index is still trading a little bit. We've had some nice momentum to the upside, but we're not still trading around the record highs for the Nasdaq. So that has been a big theme for us, making sure we're trading that index. Maybe that can catch up to the other indices and get to the record highs. We've had European stock market indices, the Germany 40, the France 40, all driving higher as well. The FTSE has been a bit range based actually. The FTSE, the UK 100 index, the largest 100 shares listed on London Stock Exchange, works a little bit differently actually, because 80% of the revenue of the 100 shares listed on the FTSE 100 index actually comes from international markets rather than domestic markets in the UK. So it's more impacted by currency fluctuations, and with the British pound very strong right now, is why the FTSE is actually struggling a bit. But we've had a big rally in Asian markets as well, with the Chinese stock index and the Hang Seng index all rallying higher because of the new stimulus measures done by the People's Bank of China earlier in the week. So that's providing a bit of a boost. Some analysts are calling for the fact that they probably will need to do it a little bit more, but in the short term it's helped to create this risk on environment. We also had solid economic data from the US yesterday as well, which showed that weekly jobless claims fell more than expected, and the final GDP data was unrevised at a pretty strong 3%. So this is good as well, because there were fears that the bigger interest rate cut done by the Fed last week, the 50 basis point interest rate cut rather than the 25 basis point interest rate cut, there were fears that they did that because they were concerned about the economy and a slowdown in the economy. But actually the economic data since then is showing actually the US is pretty decent right now. The economy is pretty strong. So that's helped to have a risk on rally in global stock market indices. However, the risk on rally in currencies has struggled a little bit, and that's due to signs of a US dollar reversal. So when we're talking about risk on in the currency market, this is where things like commodity currencies in particular lead. So Aussie, Kiwi, Canadian all strengthen, because commodity currencies are highly linked to growth of global economies, and we can see often strengthen those. But they've run quite a bit, haven't they? A big theme for us over the past several months, really, actually. Some great moves. But actually, we know this week we've been trading some reversals on those. We had some good reversal trades there intraday on the vol reversal midweek that I updated you guys with in these webinars. So we've had those reversals there. And I think it will be interesting now. Maybe people may start to think, oh, US economy is pretty good. Actually, some of the other economies are struggling. We've had the Euro economic data right at the beginning of the week. If you remember, the PMI data was pretty bad. So we might actually see a bit of a shift, okay, back into the US dollar. We've been looking for that technically. We've had some vol reversals on Euro dollar, Aussie US dollar, okay, a US dollar against the Japanese yen as well. So we've actually been trading the dollar long, and we've had the reversals that we were looking for this week. But we haven't had, a long-term daily trend in the US dollar strength yet. We're dealing with more sort of intraday sort of reversals, change of market structure. And I'll show you actually inside of Smart Charts how you're able to easily identify whether you have this risk on and risk off sentiment. In fact, let's go into Smart Charts now and have a look at this. Okay, so here in Smart Charts at the top, if you click the Tools tab, there's some really useful information here. And what you'll see is that currently the currency strength indicator here at the top left is actually showing you some risk on sentiment. How? Because you can see all the risk on currencies, Kiwi, Aussie, Euro, Pound, all right? actually all driving higher, positive for the day so far. Look at the risk off currencies, Swiss franc, Japanese yen. These are the weakest right now. So basically, when it's risk off, where investors, traders, they're concerned about the global economy, there's fears about growth in the world, what happens is that's called a risk off environment. This is where typically people will bank some profits or come out of their long positions in the stock market, and they'll move their money into more safe haven markets like the Swiss franc and the Japanese yen. And the Swiss franc and the Japanese yen have always considered to be sort of safe haven currencies because of their interest rate policy. So what we've actually had here, we've had some weakness in the Swiss, weakness in the yen, and risk on the other currencies. In fact, you have already been trading this, because this has also been a big theme for us, hasn't it? This week, in fact, because of the Swiss National Bank interest rate cut yesterday, we said, look, it's forecasted they're going to cut interest rates. We've been looking for weakness in the Swiss franc, and this is why we've had those really good opportunities on Aus Swiss, CAD Swiss, New Zealand Swiss actually pushing higher. Really good 4-hour phase changing T waves on the way up intraday. We've also been trading the yen, right, dollar yen towards the upside, because we had that losing trade on dollar yen on the daily charts. But then of course we know we need to learn from our losing trades, because if you're trading in the right part of the market structure, it can tell you something about the market. If you get stopped out on a trade, then more often than not it's telling you the market structure could be changing. And this is where from the short trade that we lost on, we went to the long side on the 4-hour power pivot, and that was a 3-to-1 reward to risk strategy. Okay, so even one loser, one winner, but because we're navigating different reward to risk, we're still net up. So this is actually a really useful indicator just to understand, okay, overnight, where are the flows? Okay, is it risk on or risk off, these kind of things? And it can be quite interesting to understand broadly actually what is actually going on in the markets. Now, in this instance, we also know though, whilst we have had this risk on environment, we've had the strength in the Oz, the Euro, the Kiwi, we also know that we are pretty stretched here as well. And we're coming into areas of resistance where we could start to see a reversal, all right? We've already started to see a reversal in the US dollar, because that was actually the trade that we were discussing just now with US dollar against the Japanese yen. In fact, all the yen pairs you can see, I mean, look, New Zealand yen has been pushing up. We've had Aussie yen pushing up as well. So we've really had a really nice time, okay, when we have these strong correlation trades, as we call them. But the US dollar yen was good because we broke through the long-term daily trend line here, where sellers didn't turn up to continue the phase 1 move, all right, and it broke the trend line. It already had these cycle formations on this red moving average where buyers had turned up before, and that was a trade that we're in. So that was the US dollar reversal that we had actually been looking for. We've also had some reversals there on the US dollar, but intraday. So remember, we had the Euro US dollar, the double top formation which Smart Charts found on the vol reversal strategy here, but then it was happening at this multi-year daily high point where sellers turned up before, all right? So we've had, again, Euro dollar coming down as US dollar strength. So we've had that sort of on the intraday charts, the kind of 4-hour, 1-hour charts, but we will be looking for the daily charts to also give us these clues. And this is why on the London Sydney trading floors we've been highlighting the Euro US dollar daily chart on the vol reversal, because what you notice is, we have these double top formations developing, but at these significant areas. So if we zoom out of the chart, you can see we are trading at some significant areas where we can see, look, sellers turned up here, turned up here. So it's a big zonal area because we can see sellers turned up here. So this is our zonal area where sellers have been turning up before, okay? So we have been already leaning against this area for some short positions, mainly intraday, but we will be looking for the daily chart to also turn here as well. And we're already starting to see a bit of strength in the US dollar, mainly against the yen pairs, but it'll be interesting to see if this seeps into the other asset classes as well, all right? So on top of actually identifying the potential trading opportunity, and really what you want to be doing is using the power of algorithmic technology, AI technology, and human insight, human pattern recognition. It's the combination of those things which becomes very powerful in your trading. It's the combination of leading and lagging tools, all right? So on top of identifying the opportunity, smart charts will also help with the risk management work, which is really, really important, okay? Risk management is key. This game is about winning, it's about losing, but you get a random distribution of wins and losses, all right? So you've got to make sure you're able to deal with a string of losing trades and it doesn't wipe out your trading account, it doesn't cause you to be fearful of taking another trade. So you've got to keep the risk low, really. So by clicking the sell icon, smart charts will populate an entry price at the blue dot, stop loss at the red dot, target the green dot, and these can all be adjusted according to your own user preferences, of course, and it'll do the risk management work here as well to find your stake per pip. And you can adjust it as well. So again, you can go from 2% to 1%. So sometimes on positional trades, we tend to lower our risk. So we have had trades this week, we've just had high momentum and our full percentage risk allocation, which is still low, or maximum 2%, all right? But then sometimes we're trading positional setups, which can offer a higher reward to risk if it works out, but it has a lower success rate because the trend hasn't maybe developed. So in that instance, this is where we tend to lower the risk. So we just tend to adapt to, market situations, all right? And the beauty of smart charts will already do all the recalculations for you. So we always know that work is being done properly and consistently, all right? Risk management, absolutely key. I'm always going to say that. And make sure you're able to deal with the random distributions of wins and losses, all right? And we'd like to set an expiry of the current bar close on the daily chart and then decline or accept the trade there at the bottom, all right? All right, so look, there's plenty of other trading opportunities developing already right now, as well as most likely throughout the day. Make sure you are tuning into all the live trading webinars all throughout the day, so you too can also participate in those trading opportunities with the live traders inside the smart charts. If you've been going forward in this week and you haven't been clear on your style, your plan, your time frames, your risk management, then definitely you need to book in your coaching sessions with your coach, with your mentor, and make sure you get that really solid trading plan that's going to help you to get to where you want to be, all right? And make sure your trading plans are realistic and achievable and grounded in the reality of how the market actually works. It's just going to enable you to have much more smoother trading. That's it from me. Have a fantastic trading day. Have a fantastic weekend. We'll be here next week for another incredible week of trading the financial markets. In the meantime, bye for now.